Good afternoon, and welcome to the webinar presenting the Nebraska Economic Forecast. The Nebraska Economic Forecast is produced by the Bureau of Business Research, which is part of the Department of Economics and College of Business Administration here at the University of Nebraska-Lincoln, as well as by the Nebraska Business Forecast Council, which is a group of economists throughout from the private sector, public sector, and university sector here in Nebraska. We're happy to present the results of the economic forecast to you today. My name is Eric Thompson. I'm the director of the Bureau of Business Research and also a faculty member here at UNL. Before we get started with the PowerPoint presentation that'll compose most of the webinar here today, I wanted to point out a few other features of the webinar. In the right side of your screen, in the middle of the screen, you'll see there's a list of participants in the webinar, and you'll see just below that in the bottom right part of the screen there's a chat window. So you can use that chat window to chat with the other participants in the webinar if you like while the webinar is going on, and please do so. You'll also see a few other features. In the middle lower part of your screen is a question and answer window. So either during the PowerPoint presentation or after the PowerPoint presentation is over, feel free to type questions into the question and answer window, and I'll be happy to answer your questions after the PowerPoint presentation is complete. Lastly, in the upper middle part of your screen, we currently have a holiday greeting, but later in the webinar, we're going to put up some poll questions for our webinar participants. We have 2 poll questions today to get your opinion and expectations about the economy, and we'll see what the audience thinks in terms of the future direction of the Nebraska economy, and then compare that with our own forecast results. So looking forward to doing that a little bit later in the webinar. So with those things pointed out, I'm going to go ahead and proceed with our PowerPoint presentation on the Nebraska Economic Forecast. Very simple outline for this presentation today. We're going to briefly talk about the U.S. Economic Forecast and then talk about the Nebraska Economic Forecast. Now we're going to spend a little time in the U.S. Economic Forecast because at the end of the day, we can't really talk about the Nebraska economic outlook without knowing what the outlook is for the national economy. We do have our own unique economy here in Nebraska. Certainly we're more heavily involved in agriculture and related industries than the typical state in the United States. But we're also a very diverse economy, very connected to the national and international markets. And therefore, as the U.S. economy goes to a large degree, so will go to the Nebraska economy. So we need to talk about that U.S. economic forecast first. Then we'll get into the details for Nebraska. So in terms of the U.S. economic forecast, we sort of divide the thoughts into 3 groups. First of all, what are the strengths? What are the things the U.S. economy has going for it at the moment? What are the weaknesses? What are some things that will be a bit of a headwind for economic growth going forward? And then what's the bottom line, kind of summing up the strengths and the weaknesses? Where do we think the economy will be going? Do we think the U.S. economy will be growing? If it's growing, will it be growing at a moderate rate or rapidly? Try to assess that bottom line for speed of economic growth for the U.S. economy over the next 3 years. So let's start by talking about some of the strengths. The good news is that our economy currently has a self-sustaining economic recovery. So over the last certainly 2 years, we've had pretty strong growth in real wages and really across the income distribution. So middle and working class workers as well as higher income workers. We've had solid wage growth the last few years in excess of inflation, so you can call it real wage growth. And this, of course, has supported consumer spending, which has been pretty solid in the economy, and also an improvement in housing activity in the country. So always positive when you're in the recovery stage of the business cycle and your economy has reached a self-sustaining economic recovery. We also have some long-term conditions that are pretty favorable. I think the regime of lower oil prices over the last few years is likely to continue over the next 3 years. Also, I think the pattern of low interest rates that we've seen over the last 7 or 8 years is likely to continue. We have had some increase in interest rates recently, but I think if you look at it from a historical perspective, interest rates will be much lower over the next 3 years than they have been on average over the last 30 or 40 years. So these things will benefit the economy. Low oil prices, low interest rates are a clear positive for the economy. We also have some beneficial plans from the incoming Trump administration for the economy, including plans to deregulate the financial sector, the labor market, the industrial sector in terms of environmental regulation, also plans for tax reform. In terms of economic growth, these things should be good for economic growth in the country. Let's talk about some of the weaknesses now. We do have some long-term issues that we continue to struggle with. We do have an aging workforce, so with the baby boom population already has started to reach retirement age, and more of that generation will be aging into retirement age. That's going to slow the rate of growth in our labor force here in the country, and that's, of course, going to impact economic growth. We have also, I think, over the last 2 or 3 decades had challenges with workforce quality in terms of the working class, middle class, in terms of issues such as workplace performance, sticking with employment, dependability, things of that nature. And those things can be a negative for economic growth as well, something we still struggle with. There's also weak overseas economies and reasons to expect that to continue, and higher value for the U.S. dollar, which is, of course, somewhat related to that. And that's a bit of a negative for export activity, which will definitely impact the economy. There's also, with the incoming Trump administration, probably some plans that are more negative for the economy in terms of plans to restrict trade and immigration. So these would tend to reduce economic growth. Also, there's no at least widely discussed or prioritized plans to reform the entitlement system in the U.S. Medicare, Social Security, and such a reform would probably be quite beneficial for the economy, but currently, at least, there's not a lot of talk about making such a reform effort over the next few years. So those are some of the negatives or weaknesses that the economy faces. If we were to sum it all up, because there are a lot of positives as well as some negatives, we do think the bottom line is we'll continue to have moderate, solid GDP growth and job growth in the United States over the next 3 years. So that's a positive outlook. Domestic workforce issues and a weak global economy, that will slow us down a bit. The new policy proposals, there's some good things in there and also some things to be a bit worried about. So that's kind of a mixed bag right now. We'll have to see which policies end up being emphasized. And again, that lack of progress on entitlement reform. So I think those, the good news is we'll have good solid job growth. We do have a few factors that might be holding us back a little bit going forward and perhaps preventing us from having truly strong economic growth. So I guess if the U.S. economy sets the speed limit for the Nebraska economy, the speed limit of the U.S. economy is moderate economic growth, maybe 60, 65 miles an hour, not a real rapid speed of growth, which we might like to see. But we'll see what happens over the next few years. Okay, time to talk a little bit about the economic forecast for Nebraska. To do that, I think it's important to talk about some of the key industries for our state's economy, the things we really specialize in and do well, and what the outlook is for those. And then talk a little bit more about some of the other details of the forecast for Nebraska. So our 3 key industries are the agricultural production complex. That's our biggest industry. That obviously includes farming and ranching, but it includes also all of those industries which provide services and inputs to farming and ranching, and also all of those businesses that transport and process agricultural commodities. A big part of our manufacturing sector, for example, is involved in processing agricultural commodities. A significant part of our transportation industry is involved in hauling agricultural commodities. But there's more to the Nebraska transportation industry than just that, and transportation really is a second key industry in our state. We are home to the headquarters of several of the largest trucking companies in the country. We are home to the headquarters of one of the 4 largest railroads in the country and have a lot of activity from in the state from one of the other major railroads in the country. So whether it's trucking or rail, Nebraska is really a center for economic activity, and it's a key. Transportation is a key part of our economy. It's been a key part of our economic growth over the last few decades. Lastly, Nebraska is a very strong state in terms of the insurance industry. We have nearly double the employment in the insurance industry that you'd expect given the size of our state economy. And it's an industry, a high-paying industry that we're historically good at and continue to have some advantages in. So let's talk about each of these 3 in a little bit more detail. Obviously, in terms of the farming and ranching part of the agricultural production complex, and in terms of the businesses that supply farmers and ranchers with machinery, with inputs that they need. It's been a pretty tough period over the last few years for that part of our agricultural production complex. Commodity prices have fallen rapidly between 2013 and 2016, first for crops and now more recently for cattle and livestock. So lower commodity prices have been a big issue for the industry, reducing profitability, reducing some of the economic activity. And that's been a negative. Now, as you'll see, we might expect the industry will stabilize somewhat over the next few years. We'll get into that detail in a minute, but we do have to acknowledge it's been a tough few years. I think the other piece of potential good news is remember that a big part of our agricultural industrial complex is not farming and ranching or supplying farmers and ranchers, it's processing agricultural commodities, whether that's transporting or processing crops, whether that's slaughtering animals, meat processing plants. So that part of the industry is still doing pretty well. That part of the industry really depends on a large crop, and we continue to have large levels of agricultural output in Nebraska. I think the other thing to say is the long-term outlook for Nebraska agriculture is quite positive. I have listed here some data from the Nebraska Department of Agriculture, which points out how Nebraska is a leading state in many aspects of the agricultural industry. We tend to have a tight cluster of suppliers and processors of agricultural commodities in the state. That just gives us a tremendous advantage for the future going forward, making us an attractive place for expansion of existing businesses and investment in new businesses in our state. So that's a big positive. The second thing we have is the Aquifer Advantage here in Nebraska. As you can see from this map of the Ogallala Aquifer, our state contains the largest share of the aquifer. We also, compared to other states, we also have, I think, the healthiest part of the aquifer here in Nebraska. So because of that, I think that leads us to have a more reliable crop here in Nebraska, regardless of agricultural conditions or climate conditions, and therefore makes us a much more practical, a much safer place in order to make investments in agricultural processing businesses. And you can see there's plans for some major investments in the coming years. And that advantage, that reliable crop, is going to be a big plus in helping Nebraska attract more businesses and more agricultural production into our state. So despite the recent problems, there's still a good future in the agricultural sector. Now, in terms of our specific farm income forecast for the next 3 years, you can see that while farm income has dipped quite a bit, it was close to $8 billion back in 2013. It's fallen quite a bit as commodity prices have fallen, but we think farm income can remain pretty stable over the next 3 years as commodity prices stabilize, admittedly at lower levels, but stabilize. And as farmers and ranchers do what they do so well in Nebraska, figure out ways to be more efficient, ways to make more money, we do think they can grow income slightly over the next 3 years. The only year we're predicting a drop is 2018, and that's partly because during that year we expect the loss of about $500 million in farm payments related to the crop insurance program. But other than that, we do think there'll be modest progress in farm income. Now, this gets us to our first poll question. Which Nebraska industry is forecast to have the fastest employment growth rate over the next few years? Services, which includes obviously healthcare and education, business services, restaurants, things like that. Construction sector, or transportation and warehousing, which is largely transportation here in the state of Nebraska. So when you get an opportunity, go ahead and cast your vote in our first poll. And we'll see the answers to this question in the next few minutes. Well, let me talk about our second key industry in Nebraska, transportation. So it's an industry where we have substantial sources of advantage here in Nebraska. Again, that strong agricultural sector creates a lot of demand. Our location along Interstate 80, the transportation sector has actually been growing very rapidly along the whole Interstate 80 corridor because of strong economies along the corridor. I think there's also just some advantages for Interstate 80 in terms of getting over the mountains as you head west. So Interstate 80 running through the heart of our state is a big advantage for the transportation industry. As we talked about earlier, we're also a rail industry center. And lastly, people. We have a large skilled workforce here in Nebraska with experience in the trucking industry. People with an agricultural background may feel more comfortable transitioning to the transportation industry. And we also have a high level of entrepreneurship, especially within our trucking industry. So for those reasons, we think transportation will continue to be a growth sector for the Nebraska economy in the years to come. Similarly, in insurance, we have a lot of advantages because we have an historically large cluster of insurance businesses here in our state. We have a lot of qualified workers with experience working in the insurance industry. We have a lot of training programs, which you'd expect in a state that specializes in the insurance industry. Hopefully there would be training programs, there would be college majors that trained people, getting them ready for careers in the insurance industry. We certainly see that, several strong actuarial science programs in the state. I'll give a shout out to our UNL actuarial science program, which is nationally ranked, so that Nebraska is effective in training people, educating people, getting them ready to work in the insurance industry. And then we have policies in the state, tax policies, regulations that are beneficial to the insurance industry, at least limiting government interference with the industry, and that can be a positive as well. Okay, so let's look at our specific forecasts. So transportation and warehousing. You can see it's an industry that's struggled over the last decade, the beginning of the Great Recession in 2007, and you can see that transportation employment is actually still slightly below where it was in 2007. However, during 2017 or early 2018, we think that transportation employment and warehousing employment will continue to grow, and we should get back to our 2007 level of employment quite soon. And you can see that we are expecting a solid rate of growth in the transportation and warehousing industry, about 900 jobs per year, which would translate into around 1.3%, 1.5% annual growth. Financial services, insurance is part of this, has done quite a bit better over the last decade. Employment is up in 2016 compared to 2007, and we expect the industry to continue to grow, also adding 700 or 800 jobs a year. Now, not all that growth will be in the insurance industry. I think we'll have growth in banking and real estate as well. but that's also an industry on the upswing with the growth rates around 1% per year. Now let's look at a couple of our other key sectors. You can see the construction sector here. Nebraska's construction sector has several things going for it. Again, like we talked about for the U.S. economy, it's certainly true in Nebraska that we have a self-sustaining economic recovery with real wage growth in our state, and that should help support household formation and residential construction. We've seen that in Nebraska in the last few years. We expect to continue to see it during the 2017 to 2019 period. Growth should be pretty robust, about 15 to 1,700 jobs a year. Another big factor is we're expecting a lot more money to pour into road building in the state because of increases in the fuel tax, because of the reallocation of some of the sales tax revenue from the general fund to road building, and there's now evidence that even the federal government will get involved more in expanding funding for road building. So with that money pouring in, that'll be a positive for the construction sector as well. So growth is going to be between 3 and 3.5% per year in construction sector. So if you look at our three industries, or two of the three industries, we see that we are expecting construction growth to be a little faster than transportation and warehousing growth. Let's look at the third industry from our poll question, services. We are expecting a lot of growth in this very large, diverse industry, about 7,000 jobs per year. Healthcare and will continue to expand at around 1.5, 1.7% per year. Business services will expand at a solid rate. Leisure activities will continue to expand. This is a large sector. There'll be about 7,000 new jobs per year, but the rate of growth will be around 1.7% per year. So if you're to measure it according to the growth rate, construction is the fastest growing industry. I see about almost 30% of respondents chose construction. 2/3 chose services. Services will have a lower growth rate, but perhaps respondents were focused on the question said rate, but in their minds, some respondents might have just been thinking about how many jobs will be created. And it is true that services will account for more than half of the job growth here in Nebraska over the next 3 years, continue to become a larger and larger part of our state's economy. Manufacturing is the last sector we're going to focus on specifically. You can see that actually the numbers in Nebraska are much better than they are in most parts of the country. We seem to have lost about 4% of our manufacturing employment in 2016 compared to 2007. You'd see much larger declines in most other states. But we have not recovered all the jobs that we lost during the Great Recession in our manufacturing industry. We were down about 10,000 jobs. We seem to have gotten about 6,000 of those back. We think we can add a few more jobs in 2007 through 2019, but still not quite getting back to that 2007 level. We're expecting 1,300 new jobs over the next 3 years, although about 1,000 of them are expected to come from a new poultry facility that's planned to be built in the Fremont area, poultry processing facility. In other parts of the manufacturing industry, we think it'll be fairly stable. Large growth in output and sales of our manufactured goods here in Nebraska, but because productivity growth is so fast in the manufacturing industry, labor productivity growth, the new sales may not lead to much growth in the number of jobs in manufacturing. Okay, we're now ready for our second poll question. So we've looked at growth in the three key sectors of the Nebraska economy, two other important sectors, manufacturing and services. So given what you've seen and just your own opinion, do you think the employment growth rate, percentage rate, will be faster in Nebraska or in the United States? We'll see the answer in a minute, so I'll give you a moment to go ahead and give your response to the poll. So we saw that there's some good news for the Nebraska economy, but will our rate of growth actually exceed growth in the U.S. economy? Those percentages seem pretty stable. Well, they're still changing a little bit here. So I'll wait another few seconds before I reveal the answer. Right now we're running about 2/3 with Nebraska. It just changed. More like a half saying Nebraska, and the rest split between the U.S. Another option is they're about the same, so maybe one's going to grow slightly faster than the other. All right, well, I hope everyone's had a chance to vote. I'll go ahead and reveal the answer again. About half saying Nebraska, about a third saying about the same, and about a sixth saying the United States. So here are the forecasts. We also do a U.S. employment growth forecast and a Nebraska forecast. Here's what we have. We actually have the United States growing slightly faster than Nebraska. So if you said Nebraska, if you said the United States or you said about the same, I think you could make a case for either one of those being the correct answer, because there isn't a large difference between the projected growth rates. So about half of you predicted what we'd find. We do, however, it might be a slight difference, but we do have a consistently faster growth rate in the U.S. than Nebraska. Now, why is that? I think throughout the whole period, Nebraska is growing a little bit slower in terms of employment, because we're expecting Nebraska to grow a little bit slower in terms of population. I think there was some reports out yesterday showing that Nebraska continues to have a problem with brain drain. We do have, in terms of state-to-state migration, we do have net out migration from Nebraska. We do benefit from a lot of international in-migration. We do have a relatively high natural rate of population growth here in Nebraska, but in terms of state-to-state migration, we do still lose a few more people than we gain. Makes our population growth a little slower, and ultimately, if the workforce is growing more slowly, employment is going to grow more slowly as well. And you see that throughout the forecast. 2018, 2019, that factor will cause our employment to grow about 0.2% slower than nationwide. I would like to point out that the employment growth forecast is still pretty positive for Nebraska. We're expecting about 11,000 new jobs in the state per year, and our workforce and population will be growing, just a little slower than nationally. The other thing going on in 2017, the gap's a little larger during that year, is you have to remember that the Nebraska economy is basically fully recovered from the Great Recession, but there's parts of the country that are still recovering, where where there's still a lot of discouraged workers, a lot of people out of the workforce. A lot of unemployment rates are still much higher than they are here in Nebraska, and a lot of cyclically unemployed people still out there in the United States. And so 2017, the U.S. will be absorbing some of those people back to the workforce. That's another reason U.S. employment should grow a little faster in 2017. So again, slower than the U.S., but not necessarily bad news. Obviously, for the long run, Nebraska has to figure out ways to improve our population growth. Other key indicators from the forecast, obviously, we talked about farm income earlier. Other than 2018, up 2-4% per year. Our non-farm personal income growth forecast is around 4.3 or 4.4% per year over the forecast period. So that's a decent rate of growth, a moderate rate of growth. I'd like to point out it's a positive rate of growth in some sense. We also show our forecast for CPI, the inflation effectively, and you can see we're expecting that to run around 2% over the forecast period, a little faster in 2017 because we're starting to see oil energy prices bounce back a little bit. And then population growth running 0.7, 0.6% per year. So if you add up population and inflation, you can see that's around 1.5, maybe 1.7% less than our outlook for non-farm personal income. So that means real per capita income is going to be growing in the state by 1.5% a year, maybe 1.7% in some years. So that's a real growth in the standard of living. And that's the source of our self-sustaining recovery in a lot of ways. So that's some positive news there. I think continuing what we've seen the last 2 or 3 years in terms of real income growth in the state, at least outside of the farm sector. Also noteworthy there, we have forecast growth in taxable sales. you'll see that it lags non-farm personal income growth. Even in the better years, it's about 0.5% below non-farm personal income growth. Why are taxable sales, growing a little more slowly than income? I think there's two reasons for that. The first is, as we grow wealthier, a larger percentage of Nebraskan spending is going to services, many of which are not subject to the sales tax. So that would explain part of that gap. Also, the continuous rapid growth of online retail sales, that continues to grow. Not all that ends up being subject to tax, and that's part of the reason for that gap as well. Well, those were the high points of our forecast, and we just wanted to share those with you this afternoon. Now I'd be available to answer any questions you may have. I'll just wait a moment or two, see if anyone types in a question for me. Well, you can do that if you like. I'm going to go ahead and give you a little bit more information here. We'd encourage you to keep in touch. Please follow the Bureau of Business Research on social media, whether LinkedIn, Facebook, or Twitter. Our information is there on the screen. You can also subscribe to our monthly newsletter, which is an e-newsletter. We'd send you 2 or 3 reports and updates about the Nebraska economy every month. And all you need to do is send your email address to bbr@unl.edu, and we'll get you receiving those periodic emails with links to our reports. Well, I want to thank everyone. We do have one question. Should we expect a decrease in ag-related companies' growth to be similar to ag income? Yes, I think if you look at ag-related companies that are suppliers to farmers and ranchers, so some of what co-ops do, for example, is supplying farmers and ranchers. There's a lot of businesses that supply fertilizer, that supply seed to farmers and ranchers. They might be impacted somewhat, especially companies that sell, I think, durable goods to farmers and ranchers. The types of machinery that the farmers and ranchers don't buy every year, don't need to buy in order to put their crop in, machinery and so forth. I think there was a lot of growth in those purchases when farm incomes were very high in early in the decade, and there's a big cutback in that area right now. So those industries, I think, will struggle or have struggled over the last few years as ag incomes have declined. I would emphasize, though, that a big part of ag-related companies are processors. So companies that process or transport grain out of state or process the grain here in the state. We have a lot of meat processing plants in the state that process hogs and cattle and so forth, poultry. And we have large crops, and we have large amount of animals being slaughtered each year. The farm income isn't great, but the output of the farm sector in terms of quantities is still quite strong. And those processors can do quite well right now. So it's kind of a split story for our ag-related companies. If you're a processor, you can still be doing quite well. If you're a supplier or a farmer or rancher, it's been a difficult period. Although we do think while incomes have fallen, they should at least be able to stay stable going forward. Well, not seeing any other questions at this time, we're going to go ahead and sign off. But thank you once again for participating in our webinar series here today. And please look to receive some information going forward as we set our webinar schedule for the new year. You'll be seeing that in the coming weeks. Thank you again.